Well, g'day there, everybody. Thanks a lot for joining me as at this Thursday afternoon market recap. We still have about 30 to 40 minutes left in today's session. However, I am seeing adequate information in terms of the candlestick construction just to give you a layout of what to expect moving forward. So, obviously, yesterday being Wednesday, we did see that major downward session. The Dow Jones Industrial Average closed down over 3%, I believe about 830 points, the third biggest sell-off or point sell-off in the history of the Dow Jones Industrial Average. We had the Russell 2000 and the Nasdaq closing down over 4% as well. Collectively, it was an absolute bloodbath. Moving into today's session, we did see a lot of weakness, a lot of material continuation into the majority of today's session. However, towards around the midpoint of the afternoon, we began to see that of a reversal which makes a lot of sense to me, as we have multiple areas of support levels on my chart, as you can see. So this is today's candlestick just here. What I'm referring to when I'm talking about the sort of the late afternoon reversals is that of this long lower wick down here on this candlestick. Now, as I do this recording, it is down, or at least the Dow is down 317 points. This is going to change. We still have, as I said, about 30 minutes left in today's session. But what is most important is where the support is showing up. And the reason I say this is because, again, we've had these sort of intermediate trend lines set on these charts for quite some time. And again, this takes us back very early into the 2018 year after the February sort of waterfall sell-off. And really since this time, we have been in effect moving above this intermediate trend line. And it's no surprise that as the Dow Jones Industrial Average has reversed off from its resistance area, and it did crack below 26,203, that we've come on down and more or less we have tagged where X marks the spot, that being, of course, this rising trend line, but also this horizontal support area, almost to the point. I mean, if I zoom in and show you this is the weekly chart at the moment. You can see that the bottom of this wick intersects these two lines as pretty much as close as what you can really get. It is almost a perfect sort of tag on my chart at the moment. So this is telling me that the Dow Jones Industrial Average, long story short, has tagged its support, and this is going to be a very important support area moving forward, or as we continue into the month of October 2018. Pardon me. What generally happens when you get into these sort of basing types of patterns or potential sort of intermediate or even macro support areas is that volatility continues to spike. So if this is going to be a sustainable bottom, so to speak, albeit temporarily, you can see this market bounce and then of course sell off and then bounce again and sell off. But what you shouldn't see is collective series of closes below roughly 25,000 on my chart at the moment. So as the sentiment of the market, again, is relatively bearish at this time, the majority, or at least the consensus, is rather fearful. They're doubtful about the market moving forward. I'm telling you right now, just as we were cautious up here, anticipating the sell-off upon which we profited quite handsomely across the markets and also a select few of individual positions, now what I'm saying essentially is that instead of falling into really the fear-based sentiment out there of people looking to actually sell a lot of their positions that are now underwater over the past number of months, what you should be looking to do is essentially stepping into potentially a little bit or nibbling into a couple of bullish positions at this time. Now, I understand it is relatively premature. A lot of these oscillators are still moving towards oversold conditions. I get that, but I'm telling you this support area is very important. And it comes back into our complete understanding of the market that, look, we're not looking for a major market reversal, so to speak, or something that's going to take us into a material sort of macro top at this time. I still think there is a little bit of gas in the engine of the markets to drive them back on up and at least retest these highs, if not take them out into the early period of 2019. But that's essentially what we're looking for at this time, to take us on up above these swing highs. And then we will be playing very defensively moving further into 2019. I do not think that we're going to see a major capitulation below 25,000 on the Dow Jones Industrial Average. If it does, what we'll do, we'll set up a bunch of sell orders down here. But the odds of this intermediate trend line holding go up rather exponentially at this time, given today's candlestick. Very important candlestick. So I hope that helps you out. We've got the S&P 500. It's still breaking below, of course, its intermediate level. There's a very important sort of support area at 27,000 or 2,700, I should say. But at the moment, this is a very profitable trade, the SPYs, and there's no real reason to actually liquidate out of that trade at the moment. I just wanted to reference, of course, the Dow Jones Industrial Average. And again, very similar to what I just spoke about on the industrial average. We have this decelerating fan line coming up through here. on the NASDAQ as well, which is tagging roughly 7,310 at the moment. Again, if you see volatility continue, there's a good chance that this is going to act as either intermediate support or potentially even some form of macro support, which will then propel the NASDAQ above. This sort of thesis or narrative goes completely out the window if we see a consecutive series of closes below roughly my red line at the moment. But if you are positioned in the Qs up here at 7,849, at the moment, it doesn't really matter what happens for you because you are sitting there extremely positive, extremely profitable, and we have already cracked through 7,520. The Dow Jones Industrial Average, again, more or less tagging our target at 25,000 today. So very happy about the outcomes of those trades. Let me skip, pardon me, into a couple of individual positions as well. We've had Amazon below 1,885, also below 1,856 here, down to 1,750. We gap below that actually today, more or less opened around 1,726, I believe. So, I mean, we made a little bit, another $25 on the difference between our sell target and where we opened. So that made us very happy on this Amazon trade. That essentially is done. Its close cousin or family member, is Google. Google also hit our target down here at $1,079 per share. This was from our shorts at 1,147 and 1,172. So these are very close to making $100. Oh, that's horrible. $100 of intrinsic value on the downside with Google with put options. And again, when we have a look at Amazon as well, I mean, you can just see for yourself here that we're looking at about 100 and 130 on this downward trade for Amazon. Pretty ridiculous figures. I'm not going to go into detail about those. I'd rather not. Pretty humble about these types of trades, but if you do some quick maths and if you're familiar with options, you'll realize just how profitable those two trades are. There's no trade on Tesla at the moment. Yesterday it was down over 10%. That was a big move. However, we didn't capture any of that. Tesla at the moment is still holding up just below 200, really in $57.60. That was our entry, trading at 253. Not the most profitable of trades. Let me just bring up some of these other trades. We've got CVX as well below 121.25. We got that outside day candlestick yesterday on Wednesday. This is absolutely cratering, so pay attention to that. Oh, I skipped over IBM. Of course, IBM hit our target. We've got so many stocks at the moment, so many active trades that people may be in that trying to jump through all of them relatively quickly in this market address, but below 147.27, down at 140.45. So a massive move there, $7 on IBM to the downside. Very handsome profit on those calls. I've recapped CVX as well below roughly that 121.25 area, charging down to 115.64. That's working out pretty well. COP tag today, below 73.53. Hasn't really moved all that much. Well, it has moved a lot since $80 a share. It's falling absolutely vertically. We do have earnings season coming up, so we're going to have to most likely liquidate out of some of these trades. We have Caterpillar, another stock below 151 and 149.60. Hit our target today, 140.52. It's really just take your pick as to what trades you got into. One of which we didn't get into, I should say, is Baidu. Baidu was a dashed line saying that, hey, it's pretty much as far as what we expect it to fall, and we're not really going to really push that trade any more than what it needs to be pushed. Boeing Airlines triggered today at 360.46. This is after a massive reversal from about $400 per share. It's only starting to move, especially if these markets continue a little bit lower. And the final stock that I haven't really referenced yet is Apple. Apple did tag below 214.32. A little bit of a counter candlestick here, but we do have a very nice double top under construction right here. Very similar to what we saw on, surprise, surprise, Amazon earlier in the month of October. All right, so that's going to do us as at this Thursday afternoon market recap, a little bit of an early recap. If you want to learn more, jump into that pro class. Encourage you to do so. Outside of that, everyone, enjoy your evening, and I'll be back with you later in the week. If not, I'll see you over the weekend in pro. Farewell.